All right, welcome back from the episode of Carnivore Trades. Today is Thursday, November 3rd, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, market here. Spiders down 1% on the day. Triple Qs down 2%, just under 2% there. You see 1.95%. And that was really the big loser there. The Dow was down 45 basis points. The Russell was just fractionally lower here. We'll talk about that in a second. I'm getting a lot of questions on Twitter about the Russell and the VIX. I know we kind of touched on it yesterday. But really the big loser today, the triple Qs. Let's take a look here. So we filled this gap, and that was the day after CPI. So 260.74, that gap is filled. 260.49 was our close today, so the gap's filled. My line in the sand, and I said this a few weeks ago, I said it earlier today on Twitter as well. The line in the sand for me is 260 on the Qs. And again, that just is this pivot here going back to September 2020. That is my line in the sand, really, for the broad market. I mean, if the NASDAQ breaks that, it's going to drag everything down. You're going to see like a flood of selling, if you ask me. And I know you'll say, like, well, this was the low here, the recent low at 254.26, but yes, but this was the level that was defended on that gap down on that CPI day. Okay, so that's the level to me that's really the line in the sand. And yeah, we tested that today. Obviously, later in the day, you see we gapped down today and really just went sideways all day long. Not a pattern of strength. Really kind of just a dead cat bounce here on the triple Qs as far as spiders are concerned. We did close back below the 20 moving average on the daily. A little bit of a doji here, so maybe there's a chance we can some upside tomorrow. You know, we went from 350 to 390 in 2-3 weeks, and now we've gone from 390 to 370 in 3 days. So daily chart, I would say the last couple of weeks were not really overbought or not oversold, but you could make a case that, you know, like hourly, you're kind of a little bit, it's not even really stretched because we flagged here, but a little bit of a pause, maybe in order, maybe some backing and filling. We do have NFP, non-farm payrolls, tomorrow. So that is important. That could be a catalyst for a possible little gap up or something of that nature. But, you know, based on Jerome Powell's speech yesterday, I doubt that's going to yield much other than a short-term relief. I mean, he unless this number comes in ridiculously cold, meaning that it's going to look like we're going towards recession, then I doubt the market really gets any sort of meaningful lasting bounce as far as that's concerned. And again, talking about big tech here, to flip back over, let's take a look at Microsoft here. This closed at the lows of the day down 2.66%. And I gave you guys this level here weeks ago. I said this should get down to this area, that 200-week moving average. It has done that. This still should get down to 210, and I'm going to show you why. So you have this head and shoulder top there. And just draw a little target there, measured move. Just activate that. It's a little not quite straight, but it's close enough. And that takes you down to about 210. So that's why I said really a couple weeks ago, and even before the CPI number, said Microsoft's got to get down to 210, 212, somewhere in that area. And we're pretty close there now. So Microsoft close to hitting that target. Take a look at Google here today. Just getting roasted. Now, again, we could get a little gap up tomorrow. We could get some relief. You got 3 black crows on the daily. You know, that's you know, usually you get that 3-bar surge to the downside or upside. Usually you get a pause candle at the very least the next day. But Google just, man, in really bad shape here. And again, this is one I wish I had shorted. Kicking myself for not getting into it on this up here. I talked to you guys about this previously. This is a beautiful bear base. Came down, we put in another kind of smaller bear base, and this thing's just plunging right through that support there. Now there is another bit of a level right around here. So we'll just take a look and add that in. Right around 82, and you have these kind of pivot lows here, but this is a bigger level here, 80 to 82 bucks if you ask me on Google. Then the real big level is that previous all-time high pre-pandemic level, which I think everything is going to go back to, and specifically the triple Qs. That's still on the target, you know, it's still on the table, that 230 area on the triple Qs. I've been talking about that for weeks, just because we got a little oversold bounce. Doesn't mean the bear is over, so just be aware of that. But Google taking a big hit. Amazon just can't get out of its own way here. Tried to rally up this morning for about 10-15 minutes and then rolled right over, closed at the lows of the day. So big tech really dragging things down. if it wasn't for XLE, and I said this over the weekend, if XLE wasn't green right now, this market would be in big trouble. And this is really, energy does make up a pretty good, portion of the S&P. Exxon has regained a lot of its market cap in the last year or so. This is now a pretty big company in the S&P, so this does hold a lot of weight. And what you're seeing right now is a lot of fund managers that are, I was just telling my members, it's a lot of the fund managers that were chasing NVIDIA last year at the highs, and Tesla and Roku. By the way, Roku got crushed on earnings today, although it did finish well off the lows, we'll say that. I do actually like this level here around 45 for a dead cat bounce, which it kind of got today, so some short covering came into play. But the point is, all those people who were chasing the highs last year, the ARCs of the world last year, they missed the move in energy, and they're panic selling tech now, and now they're piling into energy. This is what happens. That's why you got those stocks like Apple, the FANG stocks that kept running up all of 2021, because these guys missed moves and they pile in at the end. And I think that's what we're seeing here with energy. Now, I'm not saying energy's the bull market's over or anything, but this is getting stretched. I've been saying this last couple of days. You're overbought here. You're extended. You got to respect it. It's in an uptrend. I like energy long term. XOP again, a green day. This one's actually okay. I like the oil and gas exploration right now. You had an up move, and then you're kind of bullish chopping here. So I actually think XOP is in decent shape. But OIH is specifically a 50% move in a month on an ETF that tracks oil service stocks. That's I'm sorry, that's just ridiculous. This isn't, it's not Dogecoin. It's not, GameStop. Like this should not be moving like this. And this is what happens when you see panic buying, because energy is the only thing that's working right now. Triple Q's getting hammered. XHB, we talk about that all the time, getting hammered. Semis, IGV, bio, real estate, VNQ. What do we talk? We talk about these names every day, and energy is the only thing that's working. And that's why we're seeing, to go back to my original point, the VIX down 2.44%, with the spiders down 1%. That's because of XLE. That's kind of the end of it. The VIX is not going to rally with sectors green, with any sector green. So another one that's kind of holding up here, although it was down today, XLF, which we talk about a lot, that has been outperforming, and that's helping to kind of keep volatility low. Now, as far as the Russell, the reason that is outperforming is because a lot of stocks in the Russell are financial stocks and energy stocks. There's a lot of them in the Russell 2000. That's part of the reason why we're seeing outperformance there. So again, still had a nasty rising wedge breakdown yesterday. It did bounce off the 20 moving average, so we'll give it a little bit of a benefit of the doubt there. They saved that green bar low. So this is your kind of breakout bar. You test the lows. Usually you're going to hold at least the first time, but if this makes a lower high, this is going lower just like everything else. So just be careful with the Russell here. But I felt it was important to explain that, because I get a lot of questions about the VIX today. And a lot of people are wondering about small caps too, and really just energy in general and what's going on there. So I just wanted to kind of touch on that. But obviously, big tech leading to the downside. Let's get back to the spiders here, and then we'll cover the rest of our sectors as usual. So we did break below that 20 moving average on the weekly yesterday. There we go. So on the weekly yesterday, I mentioned that, this is a 20 MA rejection on the weekly time frame. So this inside bar here, big red bar, power bar, that's intact. You're still inside of that. You rejected the 20 MA, and bears have control again. So again, we're still expecting the market to go lower. To kind of summarize again, I'm still looking for 340 minimum, and probably 320 on like kind of an oversold, overdone washout, something of that nature. But nothing's changed, and I've been saying that the entire time that we've had this little bear market rally here, and this one, and this one. But again, spiders weak here. Doesn't mean we can't get a bounce day or two, but I think we're back into sell the rip mode. So you just take that for what it's worth. Interest rates today, 10-year, higher by 1.6%. Did finish off the highs. It did come back in a little bit. Maybe just a little bit overbought here. I'm seeing that, TNX pretty much faded all day long. TLT did show a little bit of relative strength. It was down 0.5%, but if we look on the intraday, you rallied up from the kind of V-shaped here, put in a higher low, and then you kind of rally back up again. Couldn't finish positive, so there was dumping into the end of the day. But, TLT did hold up okay, but the problem is the trend is still down. There's nothing really good about this. If this was bottoming, we wouldn't need to consolidate beneath the 20 moving average. It would just go straight through it. And then it would you know, it would stall out probably, I would say, right around that 100 handle. So you got the pivot low there, maybe the 50 moving average, but it wouldn't need to consolidate for a week and a half to put in a low. I mean, like that's really the bottom line. Yields are still strong, and meaning bonds weak. By the way, the Fed's little 75 basis point hike today or yesterday, they're now 28 basis points farther away. Every time they hike, the 2-year just keeps going farther and farther down, and it's like they're not even making progress. In fact, let's take a look here at the yield curves. I haven't really looked at them much today. Yeah, 2s and 10s. That looks like a fake print there. I hope that's a fake print. That's interesting. Let me know in the comments if anybody else has this. This is on TradingView here. That's wow, 2s and 10s fake printing down to 91. Holy cow! Could you imagine if it was inverted by that much? Wow, I'm just seeing this for the first time here. But anyway, 3-month 10-year again still weak. It did crack back positive. Looks like, yeah, just so it's not inverted anymore, but it's right there. 5s and 30s again, kind of coming back in. But my point is that let me know in the comments about that. Yeah, so wow. Okay, so I'm getting that on the 2-year as well. Very interesting, because that's not on the 2-year futures via Thinkorswim. You guys got to let me know if you guys have this on your brokerages on the 2-year yield. That's very interesting. That's above 5%. So my original point is they raised by 75 basis points yesterday, and this, well, it didn't crack above 5%. It finished at 4.71. So 28 of those 75 basis points are already negated. So like the Fed's just beating around the bush, just doing 75 here, 75 there. They should just cut the head off and do 100, do 150 if they have to. But they're still, every time they hike, they're getting farther and farther behind the curve, even though they're hiking supposedly aggressively. Anyways, I'll get back to the charts here. So that is very interesting. You guys got to let me know about that for sure. So 2-year, we talked a little bit about that. Semis here. Actually kind of on the stronger side today. So we had kind of a V shape in the morning, and then it rolled over with everything else. But it did come off the lows nicely. Still finished below the 20 moving average. It's still not a pattern of strength. It's still nothing to really write home about. You broke down. You had a bullish pattern here that failed. Short term, maybe you get a little bit of support here at 170, 178, 179. But again, not a pattern of strength. Semiconductors weak. And again, to say that, look at IGV there, by the way, getting hit really hard. But again, I said this last week. How many times have you seen a stock market bottom where the semiconductors were a laggard industry group? That never happens. IGV as well, down 2.5%. Again, this is not that far off of 52-week lows here. Good gap down. Might get might fill the gap tomorrow. I mean, it's a little oversold here. You're going to have that 3-bar surge to the downside, much like the Google chart. Although not nearly as egregiously bad as Google right now, but IGV lower, just like everything else. We'll be watching that. The 240 handle is going to be key on that chart. Dow Transport's actually finished green today, so a decent little rebound there for DJT. Still back inside of this little channel here, and you got to close above the 50 moving average. So Transport's still holding up. Really on the weekly, though, it's going to be the story here. I want to see that weekly close tomorrow. We'll have a better idea of what that is doing moving forward. We mentioned XHB. So again, testing the lower channel or lower kind of trend line of this channel, and that's an engulfing reversal on the weekly. We'll see if they save it tomorrow, but that's a weak look there. Same thing with ITB on the weekly, still in that lower range of that channel, and basically almost an engulfing candle on the weekly. VNQ. Bounced off the 20 moving average. Hey, you could make a case you're starting to put in an inverse, right? So you got a left shoulder head, possible right shoulder, if it can rally back up. That's the big if right now. This is not a strong pattern, and it's a weak industry group right now. But, hey, if you can trigger that, and it's interesting because you got that downsloping 50 moving average right there as well. So a break of that could trigger a daily inverse head and shoulders. And let's see, that would take you up to, wow, that would take you all the way to 95, I want to say. Let's do that real quick. Yeah, right in that area. So that's interesting. We'll keep that on the radar. Again, it doesn't mean that it's actually going to play out. It hasn't triggered yet, so we don't want to entertain it just too much. We could easily bear flag and then break back down. But interesting to look at. We'll definitely keep that on the radar moving forward. XLF, we talked about that a little earlier. Down 1% on the day. It's still holding up well. We'll see how it reacts when, if and when it gets back to that 100, 50, and 20 moving average. You see that kind of convergence there of all three of those. So that should be a decent daily chart support for now. But XLF with a pretty good reversal candle yesterday, so we have to respect that. Broker dealers, again, continue to be strong. Finished up 0.3%. And, you know, again, a strong sector. It's holding up okay. I can't really say anything too negative about it other than, you know, if that yield curve really becomes a problem, which it will, it's going to affect all financials. Anyways, energy, so crude here, really kind of a nothing burger. So down 2% today, but that's really nothing for crude these days. Still kind of just flirting with this inverse head and shoulders trend line that I didn't mean to delete. And there we go. So I'll put it back on there. You know, if you trigger that, it can get up to, it's got a good upside to it. So we'll see if that does trigger. Again, I keep saying this, but it wouldn't surprise me if they did some shenanigans before the election. So only a couple of days left, but we'll definitely keep that on the radar. For now, crude is holding up. We talked about energy here. Strong sector. I like it long term. Overdue for a correction, though. It's overbought. Still long term looks good. Nat gas is holding up okay. I do kind of, you know, I'm on the watch for this sort of like pennant here. So you could make a case you have a little bit of a bull wedge there. So we'll see if that plays out. I still think it can be bought on dips anyway. So I like nat gas right now moving forward, although it's just got to consolidate to get through all of this supply right now. So that's really what's going on right now. Lastly, if you want to know why the dollar was down today, or excuse me, the markets were down today, dollar was up 1.48%. So a nice pop. Again, you know, 112 was like a speed bump, and it really wasn't much of one. So 114 is really kind of like your bigger level here. If you take away all these lines here, you can see we have something kind of a parallel channel here as well. So possibly a little flag there building up. And again, you do have that weekly inside bar that we talked about right there. So we tested that low last week, and now we're getting a bit off that. So dollar index is holding up really well, and you've got an inside bar. We need to respect it. Again, the only problem with it is that it's basically parabolic on the weekly and monthly, but those things can take time to play out, so just be aware of that. Gold here looking really weak. This looks pretty close to breaking down here. It's got to get saved pretty soon. New 52-week low today. We didn't close at new lows, but it looks very soft here. You know, maybe it rallies up for a little bit here, but it does look like it wants to flush out. And I am ready to buy that when it does. We got to hit those levels first. Silver holding up much better. Actually, the SLV was green here, up over 1% on the day. So silver's hanging in there. Again, I like the chart of silver better. You have higher lows on the chart of silver currently versus gold, which has lower lows. So there you go. But again, you know, just to reiterate, look at GDX here. This is an ugly last 2 days, but you still have higher lows on GDX versus the lower lows on gold. So again, there's still accumulation going on, if you ask me, but I still think we have a washout on our hands. Platinum here also backing off of that 200 moving average. There we go. So get rid of this. There we go. So we'll see if it reacts off of, you got like a convergence right here. So kind of X marks the spot. We'll see if it goes back into that level. You got the 50 and 100-day moving average. Could be a little support area. We'll watch that one and keep that on the radar. But platinum also backing off down 3% on the day. Copper here, kind of a nothing burger. It's still kind of holding pattern and holding that 340 handle for now. So we'll leave it at that. Lastly, don't forget to let me know about this fake print. That is ridiculous. Lastly, Bitcoin, still holding pattern here. So you still have an inside bar and it's holding up, although it is kind of small. And I would think if it's going to play out, it's got to play out probably soon, in the next couple of days at least. Otherwise, it's probably got a higher likelihood of failing. But all things considered, it's hanging in there. It's above the 20, above the 50. But, you know, this is just a big bear base here. So it's really got to start doing something now. Same thing with Ether, a decent pullback pattern. The levels haven't changed there. If this holds up and gets a bid, it can get up to 1800 for Bitcoin. It can get to 22.5, maybe 28.8. All right, so let's flip back over to the spiders here. So yeah, just one more time. Again, not a pattern of strength. We're closing below the 20 moving average again. And on the weekly, which is more important, that is a major rejection there of that 20-week moving average. I still think this market has lower to go. Doesn't mean it goes down in a straight line. Again, we have non-farm payrolls tomorrow, so that could certainly give the market a little bit of a relief bid, if nothing else. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.